Greetings, members, one and all of the Salivation Nation. Anticipation from the Fed sends gold and silver higher. What else is? Let's explore. Yes, gold and silver are only marginally higher. Platinum and palladium took a bigger increase. In fact, palladium is trading at record highs now, getting close to $3,000. But there is a little bit of anticipation as we await the Fed meeting here. And so that is having a little bit of an effect on the price. But there's something else, too, that is affecting it here. As we take a look at this article from Market Watch and see what they have to say about it. Gold futures kicked off the week with a modest move higher on Monday, recouping just over half of what they lost in Friday's trading session, as traders looked ahead to this week's meeting of Federal Reserve policymakers. And what are they going to do at this meeting? That's the thing I want to know. They can't really do anything. I mean, they're not going to raise rates at this point. And my guess is they probably will take no action. But, the statements will be interpreted one way or the other, and I think that's going to have an effect, and people are certainly concerned. But I think really, in a way, there's a bigger thing in play, depending on how you look at this here, because we do have a speech by Joe Biden to Congress on Wednesday, and Thursday's first quarter U.S. GDP report impact on the U.S. dollar will have an effect here, too. It says Gold's Natural Advisory, Colin Czynski, Chief Market Strategist at SIA Wealth Management. That's what he told Market Watch. So we'll be on the lookout for that. Of course, what is that speech going to entail? Some people feel more higher taxes, capital gains taxes. So Monday, gold for a June delivery inched up by $2.30 or 0.1% to settle at 1780.10. And so there's where the futures are. An ounce on the COMEX after trading as low as 1768.20. Prices for the contract on Friday had posted a loss of about 0.2% for that session. Silver, meanwhile, added 13 cents to $26.21 an ounce. The Federal Reserve will conclude a 2-day policy meeting on Wednesday. No change in policy is expected, and Fed Chairman Jerome Powell is expected to continue insisting that interest rates are unlikely to rise before 2022, despite improving economic data and rising inflation fears. In fact, originally that was 2023, so now they pulled it back to 2022. That's interesting. If Fed Chair Powell were to play down the latest rise in inflation again at the subsequent press conference, gold could profit because this would confirm the impression that the Fed is prepared to accept an overheating of the economy and that it risks falling behind the curve, said Karsten Fritz, analyst at Commerce Bank, in a note. Meanwhile, gold prices briefly moved up to turn slightly higher, then move back down not long after Monday's release of U.S. durable goods orders for March. The government reported that orders of durable goods rose 0.5% last month. Economists surveyed by Dow Jones and Wall Street Journal, however, had forecast a 2.2% increase. Rounding out metals action on COMEX Monday, May copper tacked on 2.4%. to $4.44 a pound, logging the highest, most active contract finish since July 2011. And that tells you that you can basically couple that with what's going on in the lumber. Lumber is up dramatically as well, too, because of these supply chains. And I think that is also affecting the mine sector as well, too, for sure. So there's where that is. Very interesting indeed as we see what's going on with these prices, and I believe that those kind of effects, especially as we've briefly touched on here, this speech by Joe Biden on Wednesday, that will certainly, I think, could rattle the markets if he's going to be proposing this massive tax that really these big taxes on corporations, eventually most of that gets passed down to the consumer. And that is something that is a reality, and that's why the markets are nervous, because that will certainly stifle economic growth, in my view. And I think that's going to be bullish for gold and silver, for sure. And we are already seeing, lots of different factors that are moving prices upwards, and we have to take into account some of the supply chain issues that have been plaguing us through this coronavirus pandemic. We'll see how it plays out, but nonetheless, that's where things are. And the Fed's meetings, they had mentioned last year that they have more tools in their tool chest. What more can they do to other than just quantitative easing, putting more money into the treasuries and the like, and injecting more of that out there with the hopes that it doesn't recirculate back into the general economy. Because that's the only thing that saved them in the past, in my view, is when they inject all this cash out there into the markets and overseas, and it really does not circulate to a vast form here in the general Main Street economy. Now, with these stimulus checks that have gone out and are being suspiciously kind of slow in dispersing here for the latest round, where is that money going? Will that be enough to increase the velocity of money supply to just spur on inflation ad nauseum? We'll see. I mean, one thing's for sure is we know that Jerome Powell has pretty much all but admitted that inflation is going to increase through this time, but he thinks it's going to be a one and done type deal, and things will normalize because of their policies. But their policies are doing more harm than good, as we all know, because the more that you make of something, the less valuable it becomes. And when they are printing all this currency, I think that's going to definitely lead to great concerns. We already are seeing it around the world with other nations wanting to try to remove themselves from reliance on the dollar. So we'll see. We'll see. It certainly is a concern, especially as we await what's going to be happening with a reset of sorts. It's going to come in several different areas. It's actively being discussed, whether it be a digital dollar or what form that it will take. They will be repatriating, so to speak, as one example of this that could take place, all of your paper dollars and the current dollars that exist for the new digital dollars. And what would those new digital dollars look like? Well, a lot of people may be hesitant to do that. And so they may say, well, okay, we will provide you new Federal Reserve notes with a special QR code that you scan in order to make the purchase, which means that it's tracked. So that's one thing that they may do. Just guessing here in terms of what the possibilities are in case there's a new digital dollar reset. The other thing they may do is that for every dollar that you trade in, we'll give you a 25% return on it with new dollars. So in other words, they may say, for every dollar you hand in, you'll get $1.25 back in new digital dollars. And that will incentivize people to make that exchange. Until, as such, comes a time where the new dollars or the exchange that will be taking place, we will get less for them, 75 cents for every dollar. And then they won't take anymore, and those notes will be demonetized and no longer used. And in that case, we are at the total mercy of the system. And under the mercy of the system, the only thing to protect you at that point is gold and silver. Indeed. There you go. And that is something which is why I've always believed that gold and silver will always stand the test of time in the case like where we have total digitization of our monetary system. But nonetheless, I think that is one of the underlying factors where the logical road goes to when they keep printing currency like it's going out of style, and they keep injecting it into whatever sector of the economy they so choose sooner or later it's going to come back and bite us. Sooner or later, there's only one path to go, and that is some sort of a reset. And we know with technology where it is, just like Bitcoin and cryptocurrencies, those things are on a ledger-based system, which means they, and I may have misspoken in a prior video, but they certainly can be traced. Not that they are traced now by any central authority. It provides actually a threat to central authorities, and therefore is under threat in and of itself, because it will be competing with sovereign monetary systems that will be derived based off of the same or similar technology. So therefore, that's the logical conclusion that one must take in terms of where we are heading. And therefore, that makes gold and silver all the more attractive as a store of value and essentially a monetary system that can perform for exchanges of goods and services in the underground, so to speak, if it ever got to that point, and which is why it's a good thing to hold it. Many states around the United States are already printing these Ethereum notes, known as goldbacks, to help maybe get people ready for something like this, where they can be spent and be accepted by various different agencies and businesses around these states. Legal tender for goods and services, goldbacks, based off precious metals, gold in this case, and accepted and untraceable, which is, I think, important for privacy advocates out there. So there you go. So I think that is the bigger thing. Higher taxes, more monetary liquidity injection, quantitative easing. Anticipation is a word that is we're all wait for at bated breath. And all those things can occur, by the way, without an economic crash. That's right. And I believe this is why it's being talked about and essentially leaked to the general public to get people talking about it so that they can prepare for it, that it's coming instead of just being thrust upon us. And they can do this without gold and silver being in the mix in order to constrict the monetary supply and to add some sort of discipline to the monetary supply. They don't want discipline. They want to just free-form digitize it and put it out there. And that's really the bottom line to all of this. The only discipline they want is of you, which means they can control you and track all your purchases with this thing. It makes me nervous, to be honest. But that's kind of where we're going. Those of you who hold and use Bitcoin, you have sort of a layer of protection, in so much that you don't have a government agency able to peer in, at least from what I understand. But nonetheless, and down the road, they very well could be given permission or forced to be given permission to peer into those transactions. Or they can just ban them altogether, to where you have to use FedCoin or US dollar digital and be at the mercy of that blockchain, of that ledger system. So this is why gold and silver just provide another reason why it's a good idea to stack them here. As we see the prices increase ever so slightly today, I believe we should get used to some of these prices, because I think we're probably going to continue to see them climb, at least to some level, in the future, as this becomes more of a reality as we move on, and there's more talk of a dollar reset, and there's more talk of higher taxes to come. And who knows what else the Fed may have up their sleeves that they may pull out to further damage the dollar. So there you have it. Let me know your thoughts in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.